Welcome everyone to our fourth quarter market review. We'll cover the fourth quarter and how we finished for 2023, which was very good across the board. And that was really off of a strong fourth quarter that we witnessed in US equity, international, and the fixed income markets. So looking quickly at those three segments, US equities up 12.1%, bringing them up to 26% for the year. So super strong performance in the US equity markets. A lot of that driven by the tech sector and the folks or the group that we know as that Magnificent Seven. We'll get to those seven stocks in a little bit at the end of this presentation, but those were the primary drivers for the US equity markets. A strong 26% for the year. International equity did have a great quarter as well, up almost 10% at almost 16% for the year. So very strong in those markets. And then even in fixed income, which really we saw begin to struggle at the beginning of the year, flat, sort of getting to flat at the around the third quarter. For the quarter here, up 6.8% as yields decreased. That improves the total return, and that got markets positive for the year at a 5.5% return in the fixed markets for 2023. So that was great as well. So really a strong performance across the board. A lot of that in the fourth quarter was because market participants were in fact anticipating potential rate cuts as we look forward to 2024. And certainly that would help the markets out. There's only been a lot of conversation and talk about a coming slowdown or recession. And that has not really scared the markets at all. Certainly we heard that news that was going to come this year. It in fact did not. But even if it does come next year, a lot of folks are thinking, well, the Fed will come to the rescue. There'll be some, they're done with their hiking right now, which in fact looks like that could very well be the case. But they haven't really talked about when they are going to cut rates. They've stayed away from that. A lot of that's dependent on the data, the inflationary outlook, unemployment, and some of those market metrics. But again, it's really more what market participants are believing will happen in 2024 as the Fed sort of stands pat for now. So let's look at some of the market segments in a little more depth. And in the US equity space, I already commented on large growth, really leading the way over the year. In fact, for the quarter, however, we saw the Russell 2000 value, small cap value, come back strong at 15.3%. And, really that's a good sign. That means now the market breadth is starting. We're starting to see some performance in other segments, not just large growth, which really was the story this year, and the Magnificent Seven and those seven stocks, which we'll get to in a little bit. So it's nice to see some other areas of the market come back and get more of that breadth within the greater market. So we saw that with the small cap value stocks this quarter. Over the year, again, you look at the top right-hand chart, growth is still leading the way and has led the way in 2023. And that's really in that top right-hand chart, and the lower left-hand chart too. You'll see information technology was the second best performance for the quarter, next to real estate at 18.2%, which really has been hurt by rates. And again, real estate came back for the quarter because of a lot of people looking forward and thinking that, okay, rates were at the top and, the next phase is down. So we will see what happens there in 2024, but that's certainly the expectation. In the international markets, you can see here a strong performance across the board. Certainly, when you look across the different styles, some strong performance in all of the different categories, value, growth, and even emerging markets, which have struggled a little bit in this higher interest rate environment. And you'll see over the last 3 years, emerging markets still negative. They're down over 5% over the latest 3-year rolling time period, but strong over the quarter. Large growth was the best performing style in the international equity markets. And so certainly growth stocks leading the way internationally as well. We get to fixed income next. Rates really have been the story, and rates backed off a lot in the fourth quarter and came down. The most interesting chart here to look at is the yield curve, and that's in the top right-hand chart. And here we see the yield curve where it was a year ago versus where it is today, which is the orange line. And you'll see that, it's basically flat now. It's flattened out, maybe inverting, starting to invert a little bit because short-term rates are so high. And you'll see over that 1 year, certainly a lot higher than they were a year ago. But again, a lot of the market participants are anticipating that's going to come down in 2024. The long end has already done that in anticipation of that. But some good performance across the board. If you look at all the different sectors on the bottom, in your corporate market, credits, mortgages, high yield, and even govies and tips. Something to keep an eye out is going to be this yield curve, certainly short-term rates, what the Fed does there, because now long-term rates getting lower than where short-term rates are currently. If we look at the kaleidoscope, really just an interesting point here. 2022 versus 2023, the market leaders really just flip-flop. 2022, the best performing asset class was commodities. Interestingly enough, in 2023, commodities were the worst performing asset class. And if you look at large growth, that was the worst performing in 2022. Now it is the best performing in 2023 at 42.68%. So, whether some people call it reversion to the mean, a lot of volatility, asset class by asset class. Certainly why having a balanced portfolio or a target date fund approach, which is a diversified asset allocation strategy, makes sense. The balanced strategy is shown in that yellow color, and that's always going to be in the middle, not going to be the best performer, but not going to be the rest either. So diversifying still makes sense. And this is a great chart that gets that point across. So last but not least, wanted to cover what we know as the Magnificent Seven. I know we covered this in our scoop not too long ago. And the Magnificent Seven represents 7 stocks: Apple, Amazon, Alphabet, Microsoft, Meta, Nvidia, and Tesla. And they were the primary drivers of the market's strong performance over 2023. And as a result, when you look at their market cap share of, in this case, the S&P 500 index, they now represent almost a third of that overall index. And, it's an important note, just something to think about and consider as we look forward to 2024. But because now they are such a large percentage of the S&P 500, and that's almost any market cap weighted large cap index, certainly to the extent that these 7 stocks go, will very well likely be the extent to where the U.S. equity markets go and where we finish up. And so certainly some great companies here and a lot of value that they add. But at the same time, the other stocks within the S&P 500, certainly there are a lot of great companies there, maybe not getting the attention that they deserve. That's the great news, that there's maybe some some more room for the U.S. equity markets that are outside of this Magnificent Seven. But to the extent that these companies maybe falter in the coming year or years because of their exposure, and I'll call it index concentration because that's really what it is. That's really gonna be seen through these indices and performance. So indexing certainly may not be the best strategy, certainly in large cap U.S. equities moving forward as this concentration continues. And that's where I really wanted to leave it and end us, was at where we're at today, year to date. And that's really flat now for the U.S. equity markets. And this is as of mid-January. But as January goes, the markets go, I think, is the saying. But some of the things to keep our eye out on, and that we'll be looking at in 2024, which will be big themes, are in fact the Magnificent Seven, these folks here, and their impact to the U.S. equity markets, and of course rates and what the Fed does, how the economy goes in 2024, and in fact how the Fed responds to that. So thank you everyone for our market review, and we'll see everyone next time. Thanks. Bye.